Hello everyone and welcome back to on the Decod3rs channels for the first how to do something with Denomics, because we're going to talk about DeFi today. It's gonna be awesome. I'm so hyped about that because bro, I need your expertise to understand one for all DeFi on Sol.
Yeah, it's really hard. I've been talking about this all weekend. I've just come back from a 3-day live event. I've been speaking on stage about all things DeFi, and a lot of the feedback I've been getting, I'm like trying to run things through my head because it's really hard to teach DeFi because there's no like blueprint, there's no templates on how to do it. So I'm still trying to learn the exact way to teach somebody who doesn't know anything about it. So yeah, it's interesting, but I love it. It's good fun.
That's good. And how do you do that once you are on stage?
Sorry, what was that?
How do you do that once you are on stage? Like, you do have a presentation, or do you show the
Yeah,
tool?
I've got slides, and sometimes I've got a laptop on there, so I'm sort of showing them bits and pieces.
Nice.
This week was a little bit more about just opening people's mind to the possibilities of DeFi, because a lot of people are very scared. They've had pretty bad experiences chasing really big numbers back in the day. So when you say DeFi, they're like, "Oh, I'm not interested." So I had to sort of do a bit of a presentation to show people like how far the space has come, and all the opportunities that are available. A lot of people have this very narrow-minded view of what DeFi is, but it's actually quite a large space. So
nice.
Yeah, I love it.
And GM Reaper, hope you're doing good. And all of the Super Bowl enjoyers that prefer to watch a DeFi show instead of a game. Welcome. Here you're gonna make money.
Is the timing really bad? Is literally the Super Bowl on right now? Is it?
Yeah, I think it's like the overtime stuff, so it's almost over.
Okay.
So I guess they're gonna switch. Yeah, but next year we're gonna have we can cook an ad, and then we can make it on the Super Bowl.
Yeah. Setting the goals.
Yeah, exactly. And what's up, T-Box? I've been waiting for this one. Yes, I know. Me too, bro. Okay, so the way we're going to do that is we're going to go through all of the basic platform like Orca, Radium, Kamino, and Meteora, basically, to make sure I understand everything. So if I understand everything, it should be clear for everyone, hopefully. And because again, with Jupe, I wanted to try it. Okay, so the full experience did not really profitable at the end of the day, but maybe because I fucked up a couple of times, and we're gonna try go through what I've done basically, and for everyone that could be a good start to understand how to set up a range, what's the range, what's going on in the range, etc. And basically from knowing nothing about DeFi, how do you do that, and how you can make it profitable, hopefully. And that's why I needed Denomics. And Frofin, Super Bowl is done now. Okay, cool. Who won? San Francisco or the other ones? It just ended. Okay, fair enough. What was the ads? What was the halftime? Anyway, we will know. We will know tomorrow with the best moment.
Did anybody do any of those ridiculously expensive crypto ads this year or not?
I saw an article with Kraken saying to Cointelegraph that the price of the ad was too high for the Super Bowl, and it didn't really make sense to make one for crypto.
Yeah, no doubt.
Still waiting for Bitcoin to be $500,000, and then it will be worse, I guess.
Yeah.
Taylor Swift. Oh, okay. Shifts. Okay, fair enough. Okay, cool. So let's start. Let's jump into it right now. So, okay. Basically, the first thing I did was going to Orca, and that's this interface. Okay, I think even people are most saying the other one, the V1, right? That's the one people see, right, when they go to Orca Liquidity pool, right?
That's the first one you see. Yeah, you don't get to see the charts and things like that.
Yeah, but I prefer this one. It makes more sense.
Yeah, it's better to see the charts and everything. Yeah.
Exactly.
Otherwise, you're sort of jumping back between, say, Bird Eye and Orca.
Yeah, exactly.
It's a little bit confusing.
Okay, so basically, you can see when you jump into it, you see a chart with the price and a range, and it's basically the biggest thing that you need to understand, because that where you're going to get trading fees when the price action is between this range, right?
Correct.
Yes, cool. Also, what you need to know is there is different fee tier, and if you don't pull your liquidity in the correct fee tier, you don't earn fees. And you have on Orca, you have to look at your range with the position and the liquidity that you have in some money and the fee tiers that you are. So, for example, if the volume on the 0.02%, if you put your liquidity there, you're gonna earn nothing basically, even if you are still in range, right?
Yeah, it's not going to be very high yield at all.
Can you see the yield?
Yeah. Yes. Yeah, we can see that. Oh, sorry, we can see the field tier, fee tier. Sorry.
Yeah. So the fee tier, yes, but you can't really know how much you're gonna earn, right?
No, you have to go back into the other screen that has the portfolio layout, and that can give you a pretty good estimate of what sort of yield you can be expecting to get.
Okay.
But it is still estimates. It's generally estimated on a sort of 24-hour window.
Yes.
So they're looking at the previous 24 hours and saying, based on this, the estimate is this is what you'll make over the next 24 hours.
Okay. So if I provide liquidity for Sol USDC in the future 0.01%, I will make 0.2% in 24 hours.
Yes, as an average, right? But the thing is, if you press on deposit and then go custom range, got to skip that. You've read the instructions. So when you go to set your custom ranges, this is where you will actually change the amount of yield, because you're concentrating your deposits into a smaller range. So based on this current range, yes, you'd get that 0.2. But if you can tighten that up, if you're confident that you can trade within a tighter range, then you could probably demand a little bit more yield out of that pair.
Okay. And that's the first question. How do you define what's a good range? Is that 2%, 1%, 15%? What's good?
I don't think you should be looking at an arbitrary number. And this is where I think a lot of people have lost a lot of money in DeFi, because they look at numbers 20%, 30%, and that's what attracts them. That's what they put their money in. And then they don't win, and then they think DeFi is a scam. But they haven't really understood how a constant product automatic market maker works. They don't understand how arbitrage works, and they probably don't understand any sort of technical analysis as well. So what is really important is understanding even just the most basic technical analysis. So you want to go back to the other Orca screen that had the chart on it. You have the candlestick chart.
Yes.
That one. Okay. So you need to be able to at least understand the most basic concept of technical analysis, which is support and resistance. So support is just a price level where prices sort of bounced off numerous times. It's come down, closed on it, bounced off it, come down, closed off, bounced off it on a very flat horizontal level. And resistance is just the complete opposite. It's a price point where prices come up and hit it and rejected so many times. So you need to be able to identify support and resistance. So pretty much just what you're doing now, you found two levels of support and resistance. All right. And you want to find a pair. So in this case, Duke USDC, you're trying to find a pair that is sideways, right? You don't want something that's trending up. You need something that's actually going sideways within a fairly, as tight of a range as possible. But, just put another horizontal line, just say on top of there.
Yeah, it's not clean. But it could be like something like that when you have the zone of the price, right?
Put a little buffer, so you don't want to go right on that line. So you go up just a little bit higher. Go use a horizontal line. Don't have it angled, because you can't. That's perfect. And then drop your bottom line. Drop that a little bit lower as well. So it's got to be a little bit away from the price. You can't have it right on it. So grab the bottom line.
Oh, this one.
move that down just a little bit. Yep, something like that, right? So that is your range. Those two lines there, that's your bottom range and the top range. So I think it's roughly 0.48 and 0.54. So now you would set your ranges to about those levels. And that is what I would consider to be a safe range to market make in.
Okay.
If price continues to bounce around that, you're going to continue making fees. And that's how you put your money to work efficiently.
And what's the time frame do you use? Do you use like the hourly time frame? Because it's going to be a different range if you trade on days, right? On
Correct.
dailies.
So it really depends on, I guess, your goals and outcomes of what you're trying to do. So in some cases, if I'm doing LP on fairly fresh meme coin or something like Jupe or Wen or some sort of new token, Pith has been a really good one to market make. Anything that's getting a lot of attention and everything like that might be a bit of a flash in the pan. You generally use tighter, smaller time frames. So I'm down to the 5s, 10s, 15 minutes sort of thing, and just looking to capture these small ranges and get in and get out. Whereas something more like Solana or maybe now, because Pith's got a bit of market structure, you might be looking at Pith or something like that. Something that's been around for a while, something maybe has a little bit more serious liquidity and higher conviction plays in it. Then you'd be looking at a higher time frame because you're probably looking to LP for quite a long period of time. Not like half a day or a day. You're probably looking to sit in it for at least a couple of days to weeks sort of thing. So time frame just depends on the outcome. Your goals, which depends on the coins you're charting, if that makes sense.
Okay. That makes sense. But like that means like you're moving your range like every hours or every day?
Yeah. So, I mean, again, this comes down to like being able to read the markets, like being able to use technical analysis to get a good understanding of where you think price is going, and then predetermining a range to market make in, and then having a plan for either direction. Either it stays in the range and you keep making fees.
Yeah.
If it drops below, then you've got to have a strategy to bail out of that, because I'll explain how that works in a second. And you can even use strategies to dollar cost average out by having a tall range and letting price just slowly go up and eat out of your range, which essentially sells out of your position. So it just comes down to your strategy. Every time you do it, it's going to be different. It just depends on what you're trying to get out of it.
That makes sense.
But yeah, I mean, so to give you an example, I've done LPs on coins where I'm in it for 6 to 7 hours and then it goes stale or it moves out of a range and I'm not interested anymore. There's been coins that I've sat in pairs for like 2 or 3 days in a row and eaten up a lot of fees, and it's just sat in a beautiful range. There's been other coins where every couple of days I've got to actually close down the pool, reopen it into a different range because it's moved maybe. It's sort of run up a different level. So you got to sort of monitor a little bit. I'd say it's quite semi-passive, right? So a lot of people refer to DeFi as passive income, but even though this is passive in the market making side of things, it's still, I would say, semi-passive and requires some maintenance to set up and manage your positions. And I'd say, managing them at least on a daily basis is pretty important.
Yeah.
I wouldn't put something on and walk away for 3 days.
Yeah, no. But like when you close your position, like for example, if you get out of range and you close your position, then you get hit by impairment loss. And then if you have to, if you want to move your range, because you can't, like, once it's set up and you created your position, you can't change it like right away. So you have to close and reopen it. So then you have to swap back from Jupe to on Jupe, like for the other pairs, and like because you need to have the value in 50-50, right?
Well, it depends on the range you set up though, because if you set up your range offset, so if you go 50-50, where it's say you've got your 2 yellow lines there, if you go 2% this way, 2% that way, then you will be supplying 50-50 liquidity. So you'll have to supply $10 worth of Jupe, $10 worth of USDC. However, if your range is, say, lopsided, where you were saying a 10% range to the upside, 2% range to the downside, then your ratio is going to be off and you're going to be supplying $10 worth of Jupe, but $40 worth of USDC. It has to be able to make up that range. And it will sort of, it doesn't actually self-rebalance as it's being traded in. Your liquidity is getting rebalanced, but it's not rebalancing your position. It's just rebalancing your coins depending on what's in the liquidity pool.
Okay. That
So
makes
yeah,
sense.
it's not always a 50-50. It's only 50-50
Mm.
if you set the range to 50-50.
Okay, good. Okay. Yeah, that's good to know. Okay, question from Reaper. With DeFi, is it better for a range in market or doing something like getting in bottom and having a large gap upside range?
Yeah, no, this is a good question. So technically, the way a constant product automatic market maker, which is basically pretty much every single yield farming, liquidity pool, liquidity provision platform out there, apart from Liquidity, is probably the only one that isn't like this. They all are very much suited to ranging markets. So as long as the price is going sideways, liquidity provision is fantastic. If the price is trending up, I would arguably say it's better to trade or buy and hold or swing trade. You're probably going to, it's all about capital efficiency, right? I'm all about capital efficiency. So what is the best strategy to make the most out of my money? Not what is easier and can sort of make money. So I would say trading it or swing trading it during trending markets is much more capital efficient. So yeah, to answer the question, trending markets is better for liquidity provision. Ranging markets is better for liquidity provision, but you can still use trending markets and liquidity provision as a strategy of a risk mitigation where you can supply liquidity to a pair that you think is trending up, and you will be making fees as the price is going up. You will have impermanent loss, but it's actually an impermanent gain. It's an opportunity cost. So you've got an impermanent opportunity cost, because if you had just held it and sold at the top, you would have made more money. But it's also a risk mitigation tool, because as the price is going up, you're essentially selling out of your position. You're dollar cost averaging out. And by the time it hits the top part of your range, you're actually completely out, and you've more or less sold all those tokens. So you could use it as a dollar cost averaging strategy. So yeah, it's hard to say, like, should you use liquidity provision in a trending market? Well, if your strategy was to dollar cost average out of a position, I think it's fantastic. It reduces a lot of the psychological issues of dollar cost averaging as well, or trying to time the market. So if you're holding a position and you're like, yeah, I'm going to sell it when it gets to 50% or 100% or whatever price, there's a psychological issue with that, right? Because we've all seen it. When you're in front of the chart and the price starts pumping and you go, well, this is my target to sell. But then you're like, oh, but what happens if it goes further? I don't want to sell it now. It's probably going to keep going. So now all of a sudden you're getting in your own way. You're breaking your own trade plans. And that's pretty much the worst thing you do, because you normally fuck it up. So yeah, if the price keeps going, great. But if it pulls down from there, you haven't sold your position because psychologically you were greedy and wanted more. And then you end up selling it lower. So that dollar cost averaging out of a position can actually be quite beneficial psychologically as well.
That's and because it's a range, like you don't need to, like, again, if you use leverage and then you get liquidity, then you lost all of your money because you were right, like, for like 5 minutes. But because of the range trading that is like liquidity pool, then you can also come back into your range and get back your money and like being right again, which is because it's kind of better, I think. Except if you start providing liquidity to a shitcoin that gets rugged.
Yeah, it's never going to be good.
Exactly. Okay, so basically, I'm gonna do. Okay, so what I can do is provide. I will create a position, for example, for Sol USDC. Cool. So I want all of the volume, and I would like to do. Okay, so 1 hour. So if I do 1 hour, and okay, so right now, like this, I would not take that setup, right? Because
I wouldn't do it. So if I was looking to LP on Sol right now, and let's say I had an idea in my head that said I was going to chuck some money into a Sol LP for the next couple of days, I'd look at this chart and just be, I gotta look at something else. This isn't going to work. It's not going to be very efficient. I'm better off swing trading this than I am doing liquidity provision.
Exactly. What about JupSol? JupSol, something, it's kind of crazy. Oh, okay.
That's pretty good.
That's
good.
Better. Okay.
That's a good range.
Nice. Okay.
But here's what I want to throw at you as well. And this is A lot of people got screwed on the dupe Sol and dupe USD pools. I think I mentioned to you just before. I think you mentioned to me before, and I had the same issue, which was you're not looking at everything here. It's not just about the trading range. You've got to look at the volume, which is obviously that's quite important because that's how you're going to make the fees. Also, the price of the fees. So some pools have a different fee rate, so that's pretty important. And also the TVL. So if the TVL is really high, in other words, if there's a lot of people who have already got their money in that pool and you're only going to be contributing a very, very small amount, that means you're also only going to be getting a very, very small share of those fees. So something might have a huge volume and a decent fee rate and it's in a beautiful range and you're like, oh, this is going to be the best to make money off. But because the pool's so diluted, you get peanuts out of it. And in which case it doesn't really end up being that lucrative at all. So there's those few metrics you really got to pay attention to. TVL is one that I love to look at because sometimes there'll be a hot pair that's out that's getting a ton of volume. The fee rates are good and there won't be much TVL in it. I'll be all over that. I'll go heavy into it because it means I'm going to get a decent chunk or decent share of that trading fees. Whereas if something has millions of dollars like the dupe pairs did, I don't know if you remember when the dupe pairs first came out, there was numerous amount of pairs in different fee rates, but there was something like $8 or $9 million worth of liquidity in each one. So if you went and put $1,000 on it, you were getting like the tiniest little fraction of fees out of it. It was not even worth putting any money into it. So that's a really important factor. Yeah, always look at the TVL. So even this one right now, dupe USDC. I mean, it's not the best range. I think the dupe Sol one was a better range.
Yeah,
I think, wasn't it? Is that what you had up before? Dupe Sol?
Yes. Oh, yeah. It's good.
So it's a much better range to trade in. And the TVL is actually nowhere near as bad. So this has got 420K. The dupe USD pool you just had up had 1.8 mil or something like that. So
where do you see the TVL?
This would be decent. Sorry, what was that?
Where do you see it? Like the market? No.
At the top of the chart there, you've got volume, TVL.
Oh, yes. Okay. So what's a good number for the TVL?
I don't know if there's a really good number. I just sort of compare the other pools at the time and sort of get an idea of whether or not it's a lot or a little bit. So, so a small amount would be anywhere between 100 to 300 or 400K. I would consider to be a pretty small amount for a pool like this. A lot of TVL would be anywhere from 500K to $1 million plus. Would be a little bit too big for my liking.
And the volume is good, right? Like 5 million.
Volume is good, yeah.
Okay, so so if I want, can I do single asset or not? Oh yeah, I can do auto swap, right?
Yeah, so if you do that, that means you only have to supply one token and it will do the selling and readjusting and balancing for you.
Yeah, so right now I have 2 Sol, so I'm gonna put like 1. I just want to put 0.5 back. And and about the range, like that looks decent. 2%.
I'd probably still go a little bit higher with your range. I'd go you might want to zoom out a little bit on the chart because you are on the 15 minutes, which is fine, but you want to just see a little bit more.
Okay. What?
Can you see the numbers on the right-hand side of the chart? Grab it and then move it down. There we go.
That's better.
All right, so you want to be just above those 2 wicks there, just before we had the big drop down. And that's basically saying that we've dropped from one range to another range, and this is our new range, and that's where we want to market make. So I'd go to about 0.05 or so, somewhere around there.
Yeah.
Yeah, somewhere like there.
What?
That's a pretty tight range, though.
Yeah. Why is that moving?
Is it not letting you go there?
No.
Maybe too small of an increment. I don't know. Because you are zoomed in a bit, so I don't know. I'm surprised it wouldn't let you do that, though.
Oh, okay. That's better.
So normally what I'll do, you either just type the price in on the right-hand side, or you can just grab the yellow boxes, the yellow tag, and drag them. Yeah.
Boom. Okay. No, we're better. Looks good. That looks better, right? 8%.
I'd still go, if I'm going to do a tight range, I'd still drop that right down on the top. Yeah. Yeah. You could go tighter than that.
Okay, but I can. Is it Peggy? Like, what's
Is it
going
not
on?
letting you go?
Okay, I'm gonna refresh. I don't know what's going on. Okay. What?
What? This is a completely different. What is going on?
I don't understand.
That is a completely different chart.
Cheeto, Jup, Sol. Oh,
Okay. There we go. I don't know what's going on there.
Okay, so 1 hour, boom. I want
Stand that up just a little bit. Yep, about there. Or you could go a little bit lower if you wanted to.
Yeah, I want 0.5. I like rounded numbers better. And I want Jup to go a little bit here, right? So we take it large. Okay.
Yeah, and
so
the other thing that you'd do here, if you had an inclination that the price was going to trend just a little bit lower, then I would lower my range even further. Rather than just looking at the chart and going, well, this is where support and resistance is, I would sort of go, well, yeah, this is where support and resistance is now, but I'm expecting price to go a little bit higher in the next couple of days or the next, by the end of this afternoon. So you just sort of allow that into your range when you're setting it up.
But like with your range, like when do you say, for example, okay, so right now I'm like plus minus 15, 25. Is that like too much to get fees, right?
What do you mean? Sorry.
Like for example, for the -6 and plus 6%. If I do my TA and then I see, Jesus, it's like plus 25. It's
I
too
get
much,
what you're saying. If the range is too big,
Yeah.
So that can come into fact, and that's just more about getting your capital the most efficient within the range you'd be able to trade. So if the range, if you've done your technical analysis and you find a pair, but the range is really big, then I would argue unless the stats, like unless the TVL was low, the volume was high, and the fees were high, unless it made sense, I probably wouldn't do it because the window is so large that it's not going to be as efficient as generating fees because you are not, what's the word? You're not leveraging your position, concentrating your position into a smaller area. And because it's such a large area, there will be a lot more impermanent loss as price is volatile through that range. So it's not going to be anywhere near as efficient. The tighter the range, the better.
Yeah, exactly. But like, okay, but what's a tight range? Like 2 or 3%, 5%?
That's pretty tight. Yeah. Again, I don't know if there's really a number to work on. It's just you look at the chart and see how well that's sort of ranging. This looks pretty good to me. That's a pretty tight range. Nice. So I'd be happy with that.
Okay. Let's create the position then, and I'm going to do auto swap, and I'm going to provide 0.5 sol slippage error. Slippage. It should be auto, right? Okay, swap and deposit looks good to me. Okay, boom, auto swap.
Yeah, it takes a little bit because I think it's got to do like 3 transactions. So it's going to swap your SOL for some dupe, then it's going to open up the contract and then give you your mint your NFT.
Yes, because and don't burn the Orca NFTs.
Yeah.
Come on, slippage error again. Do I have the dupe? No, I don't have. Oh, no, I should have. Oh, okay, I have the dupe, so we're good. Boom.
I've noticed this on Orca sometimes. It comes up as a failed transaction when it tries to do a swap. And then I've made the mistake of doing it again, only to find out the first one actually worked. And then you end up having to sort of reverse it again. So it can be a bit of a pain.
Exactly. No, okay, so I redid the transaction when loading, like not the auto swap stuff, but just creating the position. And now I have my balance of 0.5 SOL with 131 JUP. And give me fees. Give me the fees. So please, everyone in the chat, trade JUP SOL in the 0.1 range fee tier so I can make money. I appreciate your support.
Don't just sell. You need to buy some as well. Need the price to stay in the range.
Yeah, exactly. Wash trading JUP SOL, please. please.
Yeah.
Question from Reaper. Second part, if you're going to limit no ranging asset, any opinion of using algo and arbitrage trading or yield aggregation? What?
If you're going to limit no ranging asset, I'm not too sure I understand that. Any opinions on using algos on arbitrage trading and yield aggregation? Yeah, I got some opinions. I don't quite really understand the first part. So second part, are you doing it to limit no ranging assets? Yeah, I'm not too sure what you mean by that.
What it means.
But opinions on algo trading. I've done high frequency quantitative and algo trading in the past, about a couple of years ago, to build bots and things like that. And it is interesting. I think you've got to be on the ball. It's not easy. You can build custom indicators and algorithms to be somewhat profitable and find an exploit or find an inefficiency in a market to exploit. The problem is the market dynamics change so fast, especially in crypto, that what was working 3 hours ago will all of a sudden stop working. And in some cases, depending on how the bot's built, a lot of the time they use a martingale strategy, which essentially uses almost like a dollar cost averaging into a losing position, waiting for it to come back up. You end up getting pulled into a black hole and lose all your money very quickly. So bots require constant maintenance. So unless you know how to actually build them and monitor them quite regularly, they're kind of shit. I'd suggest to the average person who doesn't understand a word I just said then to forget even looking at trading bots. Anyone who's trying to sell you a trading bot is full of shit.
Yeah.
So working in that specific industry, I work with a trading firm who did this stuff as well. You do not sell things that work. If you've got a magic strategy that absolutely prints money, I can tell you right now, you do not put it on sale to sell it to morons on Facebook and Twitter and YouTube. You do not put a referral link up saying buy my bot. That's only 20. They're all a load of shit. Just doesn't happen. So don't believe any of that shit. So yeah, I've got my opinions on it. They're great. They work. If you know how to build them and manage them, they're fantastic. If you're talking about using something that says just deposit your money in here and we have bots, I would stay away from it. Arbitrage trading, again, that's something that requires some skill and understanding on how to do it. But I mean, arbitraging between dexes is really, really good. The problem is people have built some really cool bots. Again, they're not available to you and me. They're available for institutions and stuff who build them. And they're faster than you. So you'll never be able to arbitrage. Like I've seen it plenty of times, like arbitrage opportunities between different dexes. You'll find that it's very hard for you to actually front run that because you'll normally get front run by the bots who are doing it. So hopefully that answers the question in terms of my opinion on it. They're fantastic, but they're for certain people and they're not available for everybody.
And that's what basically we see on Wall Street, right? With like the high frequency trading bot, where like those like companies are like directly connected to the New York Stock Exchange or stuff like that. Like they are in the building next to the stock exchange.
Yeah. There's lots of stories of that. Yeah, they literally move their whole office to a certain area in the city to get as close as possible to the terminals to speed up and get that tiniest fraction of a millisecond edge on the next guy, because they are extracting very, very tiny amounts of value, but they're just working on volume and frequency. So the amount of times they can repeat that one thing, and with the amount of money they can do that, they can make a lot of money. But like I said, none of that stuff is available for your average Joe. So a lot of people are always like, oh, I've heard about this thing. I've heard about this. I'm like, don't do it. It's a scam. You do not get access to Wall Street type bots.
Yeah, exactly.
You don't sell it to people on Twitter. I'm sorry.
The good way of like building your own bot that implements your own strategy that you understand and like basically make sure it's working by doing it yourself, and you optimize the fact that you're not clicking yourself, but like you have a bot that do what you want him to do, right?
Yeah. That's one way to do it. Yeah,
exactly.
It still requires constant maintenance. You can't just push go and expect money to just keep coming into your account. It doesn't work like that.
Where are we in like this high frequency trading in crypto? Like, is that already here or at the volume of Wall Street stuff? Yeah.
been here for years.
Yeah.
The whole market runs on arbitrage bots and things like that.
Yeah.
It's the perfect spot for it. It's a breeding ground for arbitrage bots because not only do you have all these decentralized exchanges, all these DEXs, all these liquidity pools, they literally move price by arbitrage. They need arbitrage bots to actually move the price around and maintain a level of mark price to the actual real traded price. That's why I said Liquidity is about the only one that doesn't, because it uses an oracle. It uses a Pyth oracle to quote the pricing, as opposed to every other DEX requiring arbitrage. So not only have you got arbitrage between all the DEXs or the swap platforms, you've got arbitrage between all the centralized exchanges, and then between centralized exchanges and DEXs, and then you've got arbitrage between things like the Sol USDC pair, but then Sol BTC pair and BTC USD pair. So you've got an arbitrage triangle between all the pairs as well, because anything that's paired between Bitcoin or Ethereum can be arbitraged between Bitcoin USD or ETH USD as well, and the other token pair as well. So like there's tons of arbitrage. That's literally how the markets move. Everything's bots. Yeah. Bots that we do not have access to. Remember that. So
exactly.
Next time someone's telling you they've got a bot and all you have to pay is $39 a month.
And see, like Machi, we need a bot for the people to re-even the playing field. I think it's a lot better.
This is the fallacy, right? And this is why I said bots aren't for sale, right? Bots that work aren't for sale. Because if you had a bot that worked, right? So you got to understand the idea of a bot or high frequency algo trading is to find an inefficiency in the market and exploit it to fill that gap and make the money. Basically, print free money from an inefficiency. If you gave that strategy to everybody and then everybody did it, that inefficiency would no longer be there and that bot would no longer work anymore. And that's why I said bots only work for a short period of time, because they find an inefficiency, they exploit it until it's no longer there, and then they have to do something else. So if everybody had the same bot, then it wouldn't work. So that's why I laugh when I see people selling a bot. I'm like, if you had a bot that works, you wouldn't be selling it to somebody. You'd be using it yourself and printing money. Does that make sense? Hopefully that makes sense.
No, 100%. Yeah, like if you have like the golden, I don't know if they call that in English, like golden chicken, golden goose, the golden goose. You're not selling the golden goose, right? Yeah.
Yes. Imagine having a golden goose that lays eggs every day. I use this analogy all the time. Imagine having a golden goose that lays eggs every day, and then instead of cashing in the golden eggs, you decide to fucking lease the goose out. Like, what an idiot! Printing golden eggs. Why would you lease the goose out? It's done.
Yeah. Except if you have like a platin goose, which is like all of the bozos that buy your training program. Do you guys personally touch shitcoins, or is it too volatile? Do you do LP for shitcoins?
I do, but it's so there's two ways I look at it. One is risk adverse, which means I don't normally use anywhere near as much money as I'd normally play with if I'm playing with shitcoins. And the other thing is it's very short term. So something that comes out that is a meme coin or a shit coin, there might be an opportunity to make some money in it quickly, but I would not come back to it day in, day out with large amounts of money trying to extract. It'd be more a case of like, hey, so a good example was when. You guys remember when launched? I was straight on that. I'm like, I know 100% degens are going to buy this shit. It's going to have a ton of volume. It's still a nothing burger. It's a shit coin. It has no purpose, but people are going to buy this. It's going to have a ton of volume. So I jumped in and did LP for that straight away, made an absolute packet, but within about a day, I'd closed down my pools and sold all that shit because I'm like, this is still going to be volatile in some direction, and I'm not going to be left holding the bag. So take advantage of the volume while it's there, but don't get left holding the bag of dog shit, basically.
And how did you play like the Jupe launch? Like, did you set up the pool like pre-market?
Not that well. I didn't play it anywhere near as good as I hoped, and it's because it's my own fault. I didn't pay attention to what Meow had put out regarding the liquidity pool that they were the liquidity that they were providing. So I jumped on it straight away. I thought, I'm going to be a genius here. This is going to be the best liquidity event I've ever seen. I had a decent bag. I think I got about 30,000 Jupe. Which was a decent haul. I lobbed it all. I sold some straight up, lobbed some of it into, I did 4 different LPs, 2 different ranges within Jupe USDC, and then 2 different ranges within Dupe Sol. So, a tight range to capitalize really quickly, and then a bigger range to, in case it sort of had a bit of volatility. And for me in Australia, the launch was like 2 o'clock in the morning. So I was pretty tired, set up my ranges. I checked it. I'm like, man, these things are printed, man. I was printing like a couple of bucks a minute. I'm like, yeah, sweet. I'm going to go to bed now. I'll come up in the morning. And I'll probably be up like $1,000 or something just from fees. Go to bed, wake up in the morning, and I swear to God, it's like it didn't move when I went to bed. I was like, what the fuck is going on? And then I realized the pools had like $12 million liquidity. The TVL was really high. Okay. I was like, well, my pissy little 20 grand turned into nothing in comparison to the pool. So that ended up being a real dud. And then that's when I sort of realized, oh, my bad. I didn't know they were going to do that. So that's my fault, not reading that. So I just shut them down instantly because I'm like, this isn't a good use of my capital. So shut it down, sold some off. I kept a little bit. I'm still a little bit optimistic that Dupe has some stuff left in it. So I've just kept a little bag there. I'm like, look, I'm well in the green with my Dupe drop. So I'll hold on to this. I think I kept about $5 grand's worth or 5,000 tokens, I think. So what's that now? $2.5 grand. Yeah. I just kept that and I'm like, whatever, I'll come back to it when the bull market's here, when up only market's back. It'll be fun.
Yes. Like for me, like I set up like the pool like D+1 after the launch, and I lost $5,000 over like less than 10%. Okay, so 8 grand over like 50,000.
Just from internal loss.
Yeah, like the market value. Yeah, like I went into like Dupe Sol pool, and with like moving the range and stuff. Like I fucked it up. Money.
You win some, you lose. Hey, it was free money anyway, right? Yeah, so if you really lose, you're probably still in the green. So I wouldn't
exactly. No, 100%. How do we ban the boats then? Forget about that. It's a free market, decentralized. We welcome the boat. We need the boat anyway, right? We already mentioned that we need them for arbitrage opportunities.
They provide a shitload of liquidity. They move the markets around for us and they enable us to get in and out. So as much as we hate them, we kind of need them. It's like a necessary evil. I don't know. It sucks.
Yeah.
But it is.
But you have always like someone who's like, faster than you, better than you, and gonna beat you on the market. You just hope to be better than someone else.
Pretty much. Good job.
Others idiot shitcoin creators just basically putting LP with every coins now, essentially making 5,000 per coin and moving it. Exactly. Yeah. And okay, so I also understood something about shitcoins and like why you need to check Bird Eye for the mint, that it's completely frozen and stuff. We're gonna talk about that when we're going to Kamino. But yes, we should move forward because it's been 45 minutes and we just show up one application.
Oh no, we had like 4. We probably skipped Kamino.
Yeah. Okay.
Probably want to talk about Meteora because I think that is probably one of the best apps we have in the DeFi space on Solana right now.
Okay, so here we set up our range all by yourself. All by yourself. You have to close your position if you have to. If you're going out of the range. So basically, right now, if this price action is going down, I will have more SOL than I will sell my Dupe to get SOL, and if Dupe is mooning, if Dupe is going up, if Dupe is mooning, then I will sell my Dupe to buy SOL because like the percentage will, like the price value need to be always the same, right? Yep. And if Dupe is going down, I will sell my SOL to buy back Dupe. So I will end up with more Dupe than initially. And I will be down in US value because
the Dupe you're holding will be worth less.
Exactly. And the way I make money is having the yield that hopefully will cover like the price action in both directions. Yes, exactly. Everything clear? I hope everything is clear. I explained it correctly, right?
Yeah, that's pretty much it.
Cool. Okay, so we don't want to talk about Kamino because it's just like an interface of
it's cool.
It's cool.
more steady borrowing and lending. There's a few vault strategies. There's a long and short strategy, but I don't think it's. I mean, we could do a whole session on that another time if you want.
Nice.
I think if we're talking liquidity pools, probably better off looking at Meteora. I think it's pretty solid product.
And so they launched recently, right? It's a new kid in town, right?
What's that? Sorry.
Are they the new kid in town? Like it's new, right?
No, so this is interesting. So Meteora was actually previously called Mercurial, which is OG back in the Serum days. If you were here before, like Solana NFTs sort of exploded. It was a pretty big player back then. Yeah, Mercurial. I believe they rebranded to Meteora, and they are also a sister company to Jupiter. So I don't know. I don't know exactly if it's the exact same team or maybe I don't know. I don't know if it's the exact same team as Jupiter, but they're somewhat affiliated. Yeah.
Yeah. Okay. No capital. Yeah. Funding team.
Yeah.
Yeah. Whatever. Cool. Okay. So okay. Maybe that's why they rebranded.
Yeah, no, well, so if you look at the branding of Jupiter and then Meteora, they're both very similar, like planets, comets, things like that. Yeah,
that makes sense. Okay, and like the beta product, which is like the new product, it's the DLMM pools, which it's where is it? Yes,
dynamic liquidity.
Dynamic liquidity market maker. Okay, so what does it mean?
Yep. So it's a bit of a iteration on the original constant product market making. It's still a constant product market making, but with a little bit of an edge. So you've got to. So one thing I tried to explain this to some people the other day is the original constant product market making, which is all from a copy paste of Uniswap. So Uniswap was the first one, and then basically everyone's copy pasted that and used the same strategy, which relies on arbitrage to move the price around. And the way to think of it is a terrible trader. So imagine everyone's got one of those mates who buys high and sells low all the time, right? That's essentially what Uniswap V1 is. And that everyone who's copied Uniswap V1 and has a constant product market maker, it's literally a person who buys high and sells low all the time. The only thing is they make money when they trade fees, right? So they're a shit trader, but they make a lot of money on fees. So that makes them somewhat profitable. So that's what a constant product automated market maker is. A DLMM or dynamic liquidity market maker just adds a little element of customization to the trading profile to be a little bit better at trading. So they're not buying high and selling low all the time. Sometimes they're a little bit more efficient. The way I like to look at it, so those three different profiles you got there, right? Spot, curve, and bid ask. The way I look at it is that's three different traders with three different strategies, three different skills, but they only trade good in certain market conditions. So the first one, the curve. So curve is a good one to look at. So curve, you got to think of that as somebody who trades really good when the price is super stable. So there's not a lot of volatility and the price is moving in a fairly tight range. That curve profile is going to be a really good trader. They're going to be able to make the most money through that period. They're going to be the most efficient with your capital and also minimize impermanent loss during that period. Now, if you click on the bid ask, you will see this is actually the complete opposite curve. Now, this is actually a trader who's better at swing trading a lot of volatility. So they're looking for those big spreads, right?
Okay.
If you're looking at a market that is trending up or trending down with a lot of volatility, then the ask profile is going to be more efficient at making money and limiting impermanent loss or limiting downside of impermanent loss. And then your spot profile is someone in between. So it's more of a so what I should mention is, say, on the curve or the bid ask profile, although they're really good at doing what their job is, they're really terrible at doing what their job isn't. So if you're on a curve, this is the problem with constant product market makers. They're still very limited and terrible traders. So the curve profile, not only is it really good at trading a very stable sideways market, if it goes volatile, they fucking suck. and they just bomb out. They have a ton of impermanent loss as soon as the market starts to move. And it's the same with the bid ask. Although they can be really good at trading a lot of volatile markets, if the market's ranging, they're terrible. They're not very. They won't generate fees. So spot is somewhere in the middle where it's a balance or a compromise of efficiency and risk. So you're sacrificing a bit of the efficiency of the trader, but you're also minimizing the downside risk of them being terrible at trading. So the way I look at it is I look at a market that I'm about to LP, and I look at the chart and I see how it's moving. Is it moving tight sideways? Is it volatile and ranging and trending? If it's trending, then I'm going for a bid ask. If it's tight, I'm going for a curve. If it's a little bit choppy, then maybe you go spot because it's a bit of everything. So you sort of pick the trader. That's what it is. You're picking the trader.
And you can even like edge your position when doing like, I don't know, like 75% of your like allocation in bid ask, and like you can put the rest in curve or even in spot, right?
So you can open up multiple positions on the one pair. So you can go and do a spot pair now and put whatever you want in there, and then leave that going. And then you can go and add liquidity and create another pool in a different price range using a different profile. So you can create as many pools as you want, or many positions as you want on the same pool using different profiles, different price spreads, different amount of bins, all that sort of stuff.
Okay. And like the good thing with that is you don't need to set up the min price. Okay, wait.
So
it will rearrange it, right?
They do something a little bit different with their concentration. And you could look at this as a positive or a negative. So they do have the ability to customize your range and the concentration of your liquidity to be more efficient and set your ranges depending on what you think price is going to do. But they are limited on how wide your range can be. And that is depending on the amount of bins. So you can see here, some pools have a maximum amount of bins. And bins just refers to like a price point where you have certain amount of liquidity allocated to that price point. So they limit how many bins you can have. So if you go maximum range on this, I think it'll tell you, it'll be like
69
80 bins or something. 69 bins.
Yeah.
Laugh there. So 69 bins is the max. So that's about as wide as your range can go.
Okay.
So you can offset the range and move it like downside or upside, but you'll still only ever have 69 bins, which means you're only going to be able to market make within a specific range. It's hard to explain it. Within a specific price range, you can move the price around and you can make it smaller, but you'll never be able to make it wider than.
But you make more money from the fees if it's tighter, right?
Correct. Yeah, the tighter it is, you're essentially leveraging your capital into a very small range and being a little bit more efficient with money. So the tighter the range, always the better. But better at making money, more chance of falling outside the range.
Exactly. Can it tell me like how much money I'm gonna make if I press enter?
It does. No. So this is the thing that I kind of like about Orca. It gives you a nice estimate and says, hey, this is what we think you're going to make, which doesn't always work out to be right, but it's a good sort of ballpark. With this one, no, but it does once you start claiming. So once you've created a pool, and then let's say a couple of minutes later, a couple of hours later, a day later, you go back and claim your rewards, it will then spit out what you're averaging there. So it'll give you live feeds. It just won't give you a predetermined or estimate, if that makes sense. There's a few things I'd really like them to update on here, which would be amazing, but I don't have a direct line with Meow at the moment, but I'm going to try.
If you do, please tell him to jump on the channel.
I will.
Okay, so I've created my one box pool. Okay, so I can see my fees that I will be able to get. And if I want to add more liquidity, I can do it from here.
Yep. So you just have to put in a certain amount of dupe, and then you can just start creating another pool using a different profile, using a different range. And it can be handy because you can, let's say you had $10,000 worth of dupe. You can create, say, 3 different pools with, say, $3,000 each or whatever. And one might be like super tight range, just like make as much fees as you can, but sell out of the position quickly. Another one might be slightly larger range that you're probably going to make a lot of money on for a long period of time. And then the other one might be scaled like, offset on the upside because you believe Dupe's going to go up. So you sort of capitalize on the run up on that last bag. So you sort of almost like splitting your bag into 3 positions and trading it 3 different ways.
That makes sense.
Yeah.
That makes sense. That's cool. Okay. So what did I... Okay. And you don't need to trade, like revenge it, close your position. It's doing it for you. I should have bring back my liquidity from here. Because also, okay, so if I do that, I was into Sol USDC, US. I set up a position, in Sol USDC just before the pump, so I'm already out of my range on Orca. But yeah, whatever.
On Orca. Yeah, it won't show up in here on Orca.
But yeah, okay, that's cool. Protocol fees. Okay, protocol fees, that's for performance. Dynamic fees, what is it?
Yeah, because that's the fee structure moves around depending on what it's in. You know what's a really good one to look at? If you go back to Orca and go to the original, not this view, but the other view, which is more like a portfolio view.
Where's the V1 stuff? Yes.
Yeah, this view. So this is a good one to look at to get a good overview of what might be a lucrative pool to LP in. Because you've got the stats here, you've got the volume, you've got the fees and the liquidity, and you've got the fee rate. So straight away, I can see just by looking at that, without even looking at the chart, I can look at that and see whether or not that makes sense for me to LP in. See, Sol USDC with a 0.01% fee, I'm like, man, it's not going to be making a lot of fees. So,
did I lose you? Did I lose myself?
They've only made in the last 24 hours, that pool's made $8,500.
Oh, I think I lost you, Denomics. I don't know if it's just me or not.
Sorry?
Okay, cool. Okay, no, we're good. I lost you on the explanation of fee rate.
Yeah. So that's what I was saying is that pool specifically, even though it's done a lot of volume, it's only made $8,500 in fees, and it's shared between $3.5 million worth of liquidity. Yeah. So unless you have a lot of money in there, you won't be making a lot of money. So in the fees, so that is not a very efficient pool to be in, because it is still also going to have impermanent loss. It wouldn't match to me. It wouldn't make sense to LP in that. You need the rewards. Oh, it's saying I'm lagging. Let me see if I can close some stuff.
I think you're back. Like the chat is bit.
Oh, okay.
There's a delay, so that's why I didn't hear you.
That's all good.
Yeah.
Scroll down a bit and let's find some more juicy pools that are worth doing. Keep scrolling.
Is there any like filters?
Yeah, you can filter by. You can go by the highest, but it's going to bring up stupid shit. So I wouldn't bother. Okay. You just want to scroll down a little bit. It'll bring up something that's like infinity yield, but it has like $20 in volume.
Fair enough.
Right, so here we've got some good stuff. So we've got some NOS Sol. So that's spitting out on average 24-hour yield of 3%. So look at the fee rate, 0.3%. That's not too bad. But what do you notice about that pool specifically that is a lot better than, say, the Sol USDC pool? So fees are 3 times higher because I think the other pool was, even more than that because I think the other pool was 0.01. This is 0.3. So the fees are 30 times higher. It has obviously a shitload less volume, but look at the amount of liquidity. It's a fraction of the amount of liquidity, which means if you were to put some money in this, you would actually have a decent share of that $8,000 fee. So go look at compare that pool there to the top one you looked at. They both made the same amount of fees.
Yeah.
$8,500 in 24 hours, and the NOS Sol, 8,600. Technically, it made more. So it made the same amount of fees, but have a look at the volume: 2.8 million versus 85. So what is more efficient use of your capital? It's going to be that. All right. But then that's when you start looking at the actual chart and going, does it make sense to market make with NOS Sol, or is it so volatile that you're probably going to lose money in the impermanent loss? So there's There's all these things that come into play, but you'll be able to get way more than 2.3% once you start compressing that range. So go back to NOS Sol, press deposit, go custom range. Now bring that right up, because look at the auto range it sets you, 68 and 56. It's out of the range. So yeah, compress that right up, and you'll see that yield drop. Yeah, there you go. So now you're looking at like 7. But again, you'd want to look at the chart.
Yeah. Where's the chart? It's not here, right? That's why they changed the interface.
Sorry?
Like, I can see the chart here, right?
No, I meant if you went to, like, say, a bird eye chart and brought up NOS Sol. So go birdeye.so. And then just type in NOS, NOS. You click on the top one, and then there where it says NOS USDC, click on that and find, there we go. Perfect. So, it's quite a volatile range, right? It's not really ranging at all. It's
not ranging.
It's not ranging at all, right? So you look at the yield and this is why I say people lose money in DeFi, because they look at that yield and they go, 7%, 24 hours, that's amazing. They put money in it, and then they lose money from impermanent loss and then think DeFi is a scam. But they just are not knowledgeable on how this stuff works.
Yeah, like you will not provide liquidity here, right?
Yeah, I personally wouldn't. I mean, you could. You just have to have quite a wide range, and I'd say it'll drop out your range. It'll either pop out or drop below your range fairly easy. So you'll end up copping it in one way or other. So to me, it wouldn't make sense. But that was just to showcase the type of yield you can get, and also just comparing. Like I said, those metrics are really important, and the two metrics there that made a really big difference on the amount of money that you can make is the TVL between those two pairs and the trading fees between those two pairs. So I think it's important to know those sorts of metrics.
And what does that mean? Like the cliffs on every, like here?
So what you're seeing there, all the gray stuff, that is the other pools that have been created in this. Sorry, I should say the other positions that have been created in this pool. Okay. So if you zoom right out, and you'll see that there's like a peak or like a mount. They'll always look like a mountain. And that's because people are always concentrating liquidity to a certain point. So that peak of the mountain, that is basically saying that's where the majority of people have their liquidity positioned right now. But as you can see, they're actually out of range. So what that means is a lot of people have now sold out of that position, and they probably have to close down their positions and reset ranges.
Oh, okay. So so you say like here, they are here, like that's the range where there's a lot of people, and like the price is actually out of that range, right?
Yep, but they probably don't know. So those people might keep their range there, which means if the price comes back down, they'll come back into range and start market making. But the downside of going outside of a range and then having price come back into your range, you're going to experience terrible impermanent loss. Because every time you sell out, you saw selling on the high, and then when it comes back in, it's buying the top of your range. So it's getting the shittest deal possible, and then you're going to start market making on the way down. Yeah, it's just terrible. It's terrible for impermanent loss. So ideally, you don't want it to go out of your range. And if it does, you want to close that pool down. You don't want to be buying back into that pool on a price coming back in.
Oh, okay. Okay, so you want to set alarm. Yeah.
Closing down their pool and repositioning it.
Okay.
If price goes back into it, they're all going to lose money.
Okay, so that's maybe how I lost some money.
You don't want the price to be jumping in and out of your range. You'll lose so much money in impermanent loss that way.
Oh, shit. Okay.
Yeah. You want it to either stay in your range. As soon as it buffs out of your range, you need to close that thing off. Cool thing is on Orca, you can set alerts. This is one of the things I was going to mention to Meteora, if I can get a hold of him, is to have some sort of an alert system, because on Orca, you can actually set an alert to send you an email to say, hey, your pool just went out of range. The other thing is using like, you could use Bird Eye or TradingView or something like that to use the signals on the actual chart. So when price actually, candlesticks move out of a price range, you can send yourself a notification and then just close your pools down that way.
I don't know where is the notification again, because I know it's like the bear stuff. It's just to change the configuration, and you have to go to the other one to. What the fuck? Where's my wallet? What? Where's my position?
Didn't you close down that position before?
No.
Oh,
Still up.
well,
Oh, okay.
yeah, I was going to say you might have been on the wrong chart. There you go.
Yeah.
So yeah, Connect, you can send yourself notifications to say, hey, your pool's just, or your position's gone out of range.
Oh.
And then you can go, all right, shit, go close that down. Yeah, because you don't want to cop it, bounce money out. And like, this is the really shit thing, right? If price is volatile, let's say you're trading within a range, or you're market making within a range, and price just pops out, you're now not market making. But how many times does price just clear out of a range and continue running? A lot of the times it'll bounce back in and then out and in and then out and then it will start running. So you've copped like 5 or 6 times where it's literally bought the top and it's you just like copping losses, and then it disappears. So yeah, it's
fucked up.
It's true.
But like, what's the for example, Meteora is doing? Is that selling just before they're going out of range or no?
Yeah, so they always scale out. Depends on where your, I guess, centered location is on that range, because it always holds this ratio, right? So when you, let's say if you had a 50-50 ratio, you've got $50 USDC, $50 dupe. As the price of dupe goes up, you'll end up with $10 dupe and $80 USDC, because it has to maintain the right amount of funds within that range, but it can't maintain 50-50 if dupe's more expensive. So it'll tail you out of the position eventually.
Okay. Cool. That makes sense. Nice. Okay.
Made 1 cent.
Second, yes.
Made 1 cent. You're in the green.
Yes. Maybe.
You should get in the habit of doing as well is like I monitor it every day, so it doesn't really matter. But screenshot your balances when you first put it in, because a lot of people they don't really pay attention to the balance. They might look at the yield later on and go like, "Oh yeah, I made like $30," but it's like, but you've also lost 27.
But do you use something like to check your portfolio?
Step finance, it's quite good. I mean,
but you don't have the history of like, when you enter in the pool and like you don't have it.
Sorry?
Like you don't have like the history of like, okay, I entered the pool at that price, and so I have that pending stuff, but I don't have the history of like when I entered and if I'm in grid or red or whatever.
Yeah, I know what you're saying. That's something where you've got to manually do it, unfortunately. It'd be cool if someone builds some software for that sort of shit. But yeah, step finance is pretty good, especially for managing your liquidity. If you've got, if you're doing some borrowing and lending on Kamino and you got pools in Orca and Radium and all over the place, this is a really good place to sort of monitor it. And you can claim from here as well. I don't know if you know the claim button. You can just claim all your positions from here, and that's pretty handy too.
Because like they should just take this transaction history and give me like a P&L basically.
Yeah, that's something that they never do is a P&L. When it comes to DeFi, you never really get a, this is how much money you made. I mean, you'll get it in the fees that you earn, but it doesn't tell you about your balance. And you know what? If I had Durden on here from Liquidity, he'll probably tell you exactly why they don't show P&L, because it'll show you that you've lost money.
Yeah, because like, okay, so and also
these
like
products, they don't want to show you that you've lost money because then you'll stop using them.
Yeah, but I still need to track my performances.
Yeah, I know.
And also like the fact that Orca is giving you a fucking NFT that sucks.
Yeah, so so it doesn't show up properly in step because it doesn't recognize it as an LP. So that's just their version of a receipt for the LP. So when you're in Radium, you get LP tokens, and then sometimes you can restake those LP tokens to earn liquidity mining. On Meteora, you just have those LP tokens represented in your wallet, and then on Orca they do an NFT, which I don't know, it's kind of cool. But at the same time, I feel like, luckily, it hasn't happened to me, and I don't know anyone who has done it. But I feel like one day someone's going to accidentally burn. Like,
I saw that. Yes,
thinking it's a scam. Yeah, like
100%. 100%. Yeah,
it's like a $10,000 pool that's just gone missing.
It looks like an NFT that you want to burn. Like it's a spiral with "do not burn." on it. I want to burn that shit, bro.
100%. It's literally telling me I want to burn this thing.
Exactly.
Yeah.
But yeah, okay. So there is no better tool to track your position. Asset Dash is doing pretty well. Like I like the value of the. I don't know if they look at the value of the pool itself or like if they get it, but you can see it on Asset Dash that you have a DeFi category when you have the price of your Orca pool.
I just thought of a product that will probably do what you're wanting. So I don't know if you've heard of it. There's another protocol called Francium. It's been around for a long time. It's another OG. I'm used to all the OG stuff because that's what we played on when we were first doing all the beta testing. But Francium's good and it does exactly what you want. Now, it does a very different. I mean, we could do a whole lesson on Francium alone. This is pretty fucking ace what these guys can do because it does like concentrated pools or it makes use of other people's pools, but they do leverage, right? So you actually borrow tokens to leverage your position. But the way they do it, you can borrow in certain ratios and you can actually simulate a long or a short position. It gives you simulation so you can see the effects of your impermanent loss visually, which helps a lot. And also you can create delta neutral strategies as well to avoid any sort of market, market exposure whatsoever. So you can almost reduce any market exposure and just collect on fees. Obviously, it's a little bit less efficient, but it's a risk mitigation tool. So I'll show you how. Let's go on USDC Miro. Click on farm. See that's ridiculous, right? So, scroll back down. Yeah, and go on the right-hand side. There's a button there that says farm. Yep, right. Yeah, right there. Go back, down, where it says, the top pool there, USDC Miro. Yep, click on that. Yep.
Oh, okay.
Right, now don't click on anything else yet, right? So up the top, we do have some templates, which is cool. But you can see here you've got that leverage and it says all the way to 2x, right? Yeah, leave that one for now. We're going to leave it where it is. You can see we've got 1, 1.5, and 2x. So this is simulating you leveraging 2 times the amount, and the asset we're borrowing is Miro. So now it comes down and tells you the specs and what we're going to be doing with that. So you can see here it's saying that trading fees from the APR is 192, but you can see how it says to 384, and that's because it's leveraging your position 2 times. So essentially 2 times what you would be getting because you're going to be borrowing Miro, doubling your position, therefore earning twice the amount of fees on the capital you supplied. But you have to pay interest on the Miro you're borrowing. So that's why it says negative 6.28%, because that's how much interest you're paying on the Miro that you're borrowing at the time. Then you got a couple other things, your daily APR. So what Francium also does, Francium daily or hourly, I can't remember, but they will auto compound. So they'll claim your fees and the farms that they do, they basically claim your fees and reinvest.
Yeah, compounding. Yeah, okay.
Compounding it, right? So you end up with a total APR of something ridiculous. Now let's go back up to the top and click on so where it says assets to borrow, click on USDC. Right now it changed a little bit because borrowing USDC now is actually at a rate of 14.56 at 2x. So go back to 2x and then look at the stats, right? So we're still going to be earning the same yield, but we're paying a higher interest. Therefore, our rates are slightly different. Now, you can borrow both assets. So you can click that little tab that says both borrow 2 assets to the right there. Yep. All right. So now this is where you can start to create delta neutral strategies by borrowing a certain amount of each token. So just grab that bar there where it says 100%, and you can just drag the button around. So that's going to be borrowing, 50% this, 50% that. In the very top bar where it says max, just put in, put in like $100 in the top bar there. Yeah, put in $100. Yep. Okay. So now we got some stats that we're working with. So you can move that little line around, the little slider bar to develop delta neutral strategies. So in other words, it's trying to borrow a certain ratio of each token to minimize market exposure instead of simulating a long or a short position. Now, this is where it gets even funkier. Go down the bottom there and press that button that says simulate, or simulator, I should say. All right. So now we've got a graph that is simulating scroll up just a little bit. Now scroll up Okay. So here it says invest days, right? So let's just simulate a 30-day, go back to 30. We just want to simulate, not that you do this, but let's just simulate 30 days of LPing. So now we can see that we're going to supply $100. It's going to borrow a certain amount of tokens. And in 30 days, we should earn 381 Myro, whatever that's worth, I don't know. And then you've got that red line there that says liquidation. So in other words, if it goes below that point, because we are borrowing assets, right? We have to maintain margin here. So if the price drops below that point, we're going to get liquidated.
Sad.
So now here's go up the top there where it says more. Top there. Now go long farm to X. Yeah, click that. So that's going to do certain stats. And what this is going to do, it's going to borrow Myro to make this position. Now go. So what that's simulating, as long as the price of Myro goes up, this pool is going to make money and you're not going to have really any impermanent loss because you'll be making money on the way up. Now go to more and select short. Okay, so now this is going to borrow USDC instead. So now if the price of Myro goes up or down, you're actually not going to really have any impermanent loss. Sorry, I should say down. You're not going to have impermanent loss because the token that you're borrowing is now cheaper to repay. Okay, so now I want you to click on neutral farming. Next to where it says more, click on neutral farming. Yeah, and do that one. So this is going to borrow a specific ratio. And this point, it's like way over the one side because this is probably the worst one to do because of the interest you're paying on USDC is actually higher than Myro. So that's why it's doing that. But on a delta neutral farm, it's going to try and get you the flattest curve as possible. Now go back to click on delta neutral farming again up the top and click on that one. Yeah. Now just
okay.
See that green curve? The idea of you want to get that green curve as flat as possible. The flatter it is, the less chance of impermanent loss. The more the price goes down, more impermanent loss you're going to get. Price goes up, more impermanent loss you're going to have. Now, there's another little trick we've got. There's a little thing there that says stop loss. Can you see a little toggle? Yeah, right there. Okay, so now we can actually set stop losses on your pools. So instead of having a range that you are trading in, if the price moves outside a range, you can have it actually liquidate your position instead of actually getting liquidated yourself or copying more impermanent loss. So now you can actually drag those two levers up on that little purple bar. Drag it, keep going heaps further so it comes in. So you can see that yellow bar starting to move now. Yeah. So you can actually move your stop losses around. So in other words, if the price sort of starts to have it, if the price is moving around and all of a sudden you're going to get impermanent loss, you can have the pool shut down. You can have the pool liquidate for you. So you avoid all the volatility. So it's actually like insane for the strategy you can build. Anyway, the reason we've gone on a real big tangent here, but the reason I showed you this one is when you actually open up a position on this and you go to your dashboard, it'll actually show you the P&L of your original position. So you may have we were talking about before about starting a pool with $100 balance. Okay. It'll actually say if your balance has actually increased or decreased as well. It'll actually have a green little P&L.
But why do they need all of that to calculate my P&L and they don't do it for anything else?
What do you mean? Sorry?
Like, why do they need that kind of setup to be able to calculate my P&L when I just want my P&L when I set up on Orca?
It's just Orca just haven't bothered to implement those strategies. And as I said before, the reason they probably haven't is because most people who are doing LP in the likes of Orca and Radium are probably net negative. They're probably losing money. And why would you show people that they're losing money if you want them as customers?
But the people want the truth.
Yeah, but they don't want to do that. I know. As long as they don't list it, as long as they don't show people they're losing money, people still keep putting money into it.
Yeah, that makes sense. That makes sense. Show us your end. What? Okay. Holy shit! No, we are talking. Okay, so see, Reaper's like he liked the curve stuff.
Like the Francium's cool, man. Like I said, we probably need to do a whole session on this. When you start unpacking the delta neutral strategies and then playing around with different amounts of borrowing, and I feel like, man, there's a couple of really cool protocols on Solana that I feel like if someone merged like a few of the features from each one, we would have the best product on Solana. Like take Francium strategies, delta neutral strategies, stop loss strategies, and the leverage pools, which is similar to like Tulip. Combine that with either Lifinity's proactive market making or even Meteora's DLMM different profile strategies, using Orca's like concentration, and then couple that with Radium's ability to do liquidity mining with your LP tokens. Like, dude, you could build some like pretty shit. And it'll be only possible on Solana. So yeah, let's do it. Someone's got to build it.
Looks like we find
we'll find some investors and we'll just build it ourselves.
Yeah. Looks like we find a nice new playlist to set up on the channel, man.
Yeah. It was stuff, man.
Yeah, it was definitely not a one-time thing. So basically, people were scared from DeFi because they lose money, and then he's trying to show them it's not like that anymore. Yes.
It's not that it's not like that anymore. You can definitely lose money in DeFi.
Yeah.
I think the important thing to understand is you need to know how these tools work. You know, these things are designed to make money, right? But if you don't know how to use them, you're gonna lose money. I don't know how easy to say it. You need to know how to use this shit. If you just chase those big numbers, 4,000, you see 4,000% and you go, I'm all in.
Yeah.
I guarantee you're going to lose money because you'll be doing something silly.
I mean, if you make money, you're going to stay in DeFi, and then the platform will continue to exist because everyone makes money. So it's cool.
Yeah.
Okay, that's cool. Okay, what else? Do we forget anything? Yes. So we have a couple of points that we didn't talk about, but maybe we can keep that for next time, because it's gonna be like 1 hour and 20 minutes, and I know you want to rest right after your long weekend.
I'm literally ready. As soon as I get off this call, I'm jumping in the massage chair. I'm gonna have like an hour chill out, and then I'm probably just gonna veg on the couch for like, I don't know, for a day or two.
Yeah, bro. Me too. It's gonna be. It's 6:30 a.m.
It's an early one for you. It's an early one for you. It's 4 o'clock in the afternoon for me, so it's not too bad.
That's cool. But oh man, like, thank you so much. That was really interesting, fascinating, and we should do that. Schedule more that often, and we can continue this series. That could be cool.
Yeah, I know you wanted to touch on like liquidity mining and
staking
your LP tokens and stuff, so we can do that next week or something if you want. I'm easy.
So next week, same time?
Shouldn't be a problem. Yeah. Nice. Oh, actually, so next week I'll have to be picking my kids up from school about this time. So, well, actually, we were originally going to do it at like
we can
3 hours earlier, right?
Nice.
So we'll stick to the original time. Yeah,
we can definitely do that. Okay, we can clean up the talking point, put everything in order, and then we can have a how-to number 2.
Yeah,
how to the whole series. Wonderful. Okay, man. Thank you so much. Thank you, everyone in the chat. Thanks for everyone is happy. Nice. Hell yeah, Reaper is happy too. Everyone is happy. Thanks, guys. Perfect. That's cool. Okay, I'm happy. Nice. Cool. Amazing.
Good question. Good.
Scriber shows on Thursday. You are my new BFF, man. Telling me. But yeah, man, again, thank you again, Denomics, for your help. Really appreciate your time. Thank you, everyone in the chat. I hope you like the show. You're gonna get more of that. Subscribe to the channel, like the video, follow Denomics. You have his account in the pin message in the chat and in the description, and Scriber Media. And we will see you in the next show. Bye, everyone, and thank you so much.